Hi, everyone. Sorry about that. We hung up on you instead of unmuting. So welcome to the Ontario Rent Supplement RGI training session. My name is Olga Tasci. I'm the Director of Operations. And just want to welcome you to the session. So we'll get underway quickly here. Just a few points that I wanted to raise before we get into the meat of the workshop. First of all, I wanted to clarify that the content concerns rent supplement, CMHC rent supplement program co-op, so Section 95s that receive OCHAP and Section 61 co-ops as well as ILMs. So we're not dealing with RGI calculations for any other programs. This is the third in a series of workshops that we've offered this fall on RGI calculations for the Ontario Rent Supplement Program. Two workshops were held last week, one in Kitchener and one in Toronto. We are recording the session today so that it can be made available to people who weren't able to join us. A couple of points on the logistics. We will be taking questions at the end of the session. To pose a question, use the chat function that's available in ReadyTalk. We have Trina who is monitoring the questions, so if your question is of a technical nature, she'll be able to help you with that right away. If it's about the workshop content, then we will deal with that at the end of the session. Everyone is muted, so we can't hear you, and it just avoids background noise so that you can all hear us properly. So without further ado, I'll turn things over to Trina Murphy, our Rent Supplement Coordinator, who's going to lead the session and also answer your questions. If you do have questions that come up after the fact, all is not lost. You can reach Trina anytime to ask questions. She is always happy to help whenever necessary, and many of you have probably already interacted with her. So we have lots of people signed up today, so thanks for joining us, and I'll just turn things over to Trina now.
Okay, well, welcome everyone. I'm excited to actually do this for you. Over the past almost 2 years now, we've had a number of questions, and I think this will also help those that still have questions that come in or are new to the program and want to figure out how to do some of the calculations. So for today, sorry, I'm just trying to flip to the next slide. It doesn't seem to be working. Okay. Well, I'll carry on just so that you know. For today's agenda, we're going to just talk over some key points. We're going to be looking at some things about income verification, occupancy standards. If time will present, we have a number of scenarios that we're going to give for doing some RGI calculations. And then we're also going to talk about the steps that are needed to do the calculation and talk a little bit about filing your annual AIR return online. So for some key points that we have, it's also very important that your rent supplement administration is fair and transparent. To make sure that all the rules that you apply are consistent, that you are accountable for the administration of this rent supplement program. We do understand that the calculations are not a science, that there's always going to be one-offs or these odd anomaly situations that occur. You know, the guidebook is there from our agency website, and if the information you're looking for doesn't appear to be there, that's where I can step in and help. So always feel free to reach out to me. If you have any issues, I'm not available, and you're wanting an immediate answer, you can always try your relationship manager as well. Okay. It's also very important that you provide some information related to your record keeping. You make sure all the annual income verification documentation is together, the supporting documentation for what they're declaring as income. All of that is kept in good standing in your offices, so that when we do come to do a review, that all the information is there to make sure that the calculations were done correctly. Now we're moving on to fairness and accountability. It is important that, again, I mentioned that all rules are applied fairly to the households. So you make sure that your decisions and your calculations are documented and can be explained quite easily. And then again, that calls for where you're keeping all of your record keeping up to date. And again, get advice when you need it from us and when you're not sure. Okay, and always remember that the program is there to benefit the member. So think of that when you're applying these rules. Okay. There also should be a system in place for allocating your subsidy. So whether you have an internal waiting list, it really should be a first come first served basis, and you should also make sure that the subsidy is part of the bylaw and the rules on how to obtain subsidy is in your bylaws as well. Also make sure when you're doing your income verifications that you obtain enough information. So you want to make sure you have all household compositions, the number of families, the number of people residing in there, their ages, their sources of income, and verification of that documentation. You should also make sure that the applications are signed by all applicants over the age of 16. And that's also very important when you're looking at these applications. You should also make sure that there's no conflict of interest, and if there is, that you have steps in place to avoid that. It should be something, you should have a conflict of interest in your bylaws. So if you don't, well, I think most do, but if you don't, you should make sure that there's something set out there for that. So with your income verification, members, of course, must report and provide proof of all income and assets throughout the year. Even if their income changes, they must report that. So typically you would see types of income verification would be consecutive pay stubs, a stub from Ontario Works, an investment statement, or a statutory declaration, and also a notice of assessment. The notice of assessment is very good to have as well, so that you can validate and verify the income that was declared on their application from the previous year. It gives you a sense of what they're declaring is fully disclosed. There is occupant standards that must be adhered to. CMHC does not want to provide subsidy to a household that has extra bedrooms. There are rules about how many bedrooms a household can have depending on the composition. You can refer to our rent supplement guide to find out all of that information, but generally it's one person per bedroom, and of course couples are expected to share a room. A household that is overhoused meaning if they have more bedrooms than what they're allowed under the occupancy standards, should be subject to an overhousing charge. The co-op is responsible for setting these charges. There's a number of ways they can do it, whether it's, for example, if somebody's living in a 2-bedroom unit and should be in a 1-bedroom, then the rules could state that they would have to pay a charge based on the difference of the market rent between a 2-bedroom unit and a 1-bedroom unit. Similarly, I've seen co-ops where they've just made a dollar value, like per bedroom. So it would be a $50 charge for every additional bedroom that they are over. So it's totally up to the co-op and the members and the board to determine that amount, but what is determined must be in your bylaws. It is part of your rent supplement agreement that there should be something in place as of July of 2018. So if you haven't, you should speak to your board soon and get that going. If there's occupancy agreement for the assisted household say that they must be pay the overhousing charge, and then they're asked to move an overhoused household into an appropriate size unit. If the household refuses to move and wants to stay in their original unit, they really shouldn't be receiving assistance, and then the co-op, of course, can use the overhousing surcharge approach. So as an example, we have a mother and her son who are overhoused in a 3-bedroom unit. They're only eligible, of course, for a 2-bedroom, 1 room for the mom and 1 room for the son. Their assisted housing charge for the household is $453, but market rent for a 2-bedroom unit is $980, and the market rent for a 3-bedroom is $1,180. So in this case, the difference between the market rent from a 3-bedroom to a 2-bedroom is $200. So that amount would then be added to the assisted household charge of $453, which then would mean that that household would have to pay $653 for their assisted housing charge. So it's a pretty easy calculation. It's pretty good to, for this sort of thing, just to identify the difference in, between a 3-bedroom to a 2-bedroom without putting a dollar value, so that in future years when housing charges increase and the market rent goes up, then it'll always be sustainable. You don't have to keep redoing those bylaws to adjust for the dollar value between the units. We have basic rules that apply. Now this is very important. The rent supplement program is very strict on this. It's 30% of the gross monthly income for primary residents. It is not to be 35, 36, it's not to be 25, it has to be 30%. There's no fluctuation with that. You can also use scales depending on whether or not someone who may be on social assistance, if they have any additional employment income, they can use, if they don't, then they can use the scale set out for Ontario Works and Ontario Disability. You also have another key factor is your utility charges or allowances. These figures come from CMHC on an annual basis. We will publish them up to our website. So right now you can see the 2018 chart is available, and hopefully by March 2019 we'll see next year's. So when you're looking at doing your calculations, whatever current utility chart that's available at that time is the one that you should be consistently using for the remainder of your fiscal year. So if your fiscal year starts in February, right now you're probably looking at your income verification applications, and you would be looking to use the 2018 chart. And if someone down the road, let's say in July of 2019, applies for subsidy, there's availability, they qualify, you wouldn't use the 2019 chart, you would still use your 2018. So I'm going to present to you right now a scenario for doing a calculation. So we'll just walk through this, and if you can, just kind of look at it yourself and see if you do the calculation, and then I'll go over it, and hopefully then we'll have come to the same answer. So we have a single man who lives in a 1-bedroom unit. Income verification shows that he earns $42,000 a year gross, and he lives in a fully serviced unit. So when we look at this, we would see that we know that it's an annual amount, but of course the calculations are done monthly. So how do we determine what we're going to do? So the first thing we would say is that, again, you always have to use the gross income for a 1-month period. The other thing we really need to look at is that because we're charging the monthly housing charge, you need to figure out what the monthly income is. So if we look at the $42,000, we would then take that and divide it by 12. So the next slide I'm going to show you what the calculation would look like. So you would have $42,000 as an annual income divided by the 12 months. So that would give us a gross amount of monthly for $3,500. Then we would have what's known as an employment exemption. So because he's a single person, he's entitled to a $75 income deduction. So removing that now reduces his monthly adjusted income to $3,425. If we look at 30% of that amount, his monthly housing charge would be $1,027.50. Why not any utility allowances, you might ask? The reason for that is because it's fully serviced. So all services are provided, therefore there is no exemption allowed for that member. So when we look at any income that can have the employment exemption, you would have, of course, self-employment, employment, even if it's seasonal, training allowances, employment insurance benefits, workers' compensation, and strike pay. The deduction is either a $75 deduction or $150, depending on the household configuration. So to obtain a $75 exemption, it would be for a person who has no dependents, or you can have $75 for each spouse if they both have earned income. If you had the $150 deduction, it would be for a single parent who has dependents, and for a spouse whose partner has no earned income, and they also have dependents. So you're not going to get any more than the $150 exemption. Even if they have a spouse who didn't work and they had 2 children, it still would be at the maximum of $150. Child and spousal support payments made by an occupant can also be deducted from the gross monthly income as long as it's verified. So as long as you have supporting documentation such as a legal document or a declaration confirming that the payments are made and the amounts and the dates, then that can be excluded from the calculations. We do have 2 different social assistance. We have Ontario Works and Ontario Disability. When a family's household income is only social assistance, a scale is used to set the charge. Again, our Rent Supplement Guidebook online on our website has the charts that are available. This is not something that's was with the CMHC's program guide, so it still exists. The numbers haven't changed. The thresholds haven't changed. It all remains the same. We do also have some family units that receive income as well as social assistance. So to determine the scale, you would take 30%, or the 30%, you would have to look to see at what their total income is, aside from the Ontario Works check and their ODSP check, and then see if that is greater or less than the threshold. The threshold is called a non-benefit income limit. So we have our second scenario. We have, again, a single man, lives in a 2-bedroom unit with his 5-year-old daughter. He receives Ontario Works for 2 beneficiaries and earns $500 a month working part-time, and it is also a fully serviced unit. So when we're looking at this, we want to determine, of course, because he's receiving Ontario Works as well as income, we want to make sure, does that income meet the threshold? So when we look at that, we say, okay, we see that they've got a gross monthly income of $500. The non-benefit income limit for that program for Ontario Works 2, family configuration of 2, is $791. So we know that his income is below the threshold, so therefore the scales can be utilized. So Ontario Works 2, beneficiaries 2 is $191. That would be his assisted housing charge. And again, because it's a fully serviced unit, there wouldn't be any allowances for utilities. So when you're using the chart, it's also important to make sure you choose the correct one, whether it's Ontario Works 1 or Ontario Works 2. How do you know, you ask? Well, that's pretty easy. It's very identified on our guidebook, but just so that it's clear, Ontario Works 1 is for a single person or a couple with or without dependents. Ontario Works 2 is for a single person with dependents. And there is only one chart with scales for the Ontario Disability Program. In the two scenarios that I presented, it was noted that they were fully serviced units. So what is a fully serviced unit, you might ask? So what that means is that the housing charge includes heat, hot water, fridge, and a stove. If all of these services are offered within the housing charge, there is no adjustment for utilities. So if there's the 5 are included in the rent, then no utility allowance is given. If there's more than 5, for example, you may have a washer, a dryer, or a dishwasher in the unit that's included in the housing charges, then that is eligible for a utility charge. If there's fewer services offered, then they would be entitled to a utility allowance because the member would be paying for those costs themselves. And it's important to note that a utility allowance is applied to the entire unit and not to the individual, so it's one encompassing dollar value. And the allowances are based not only on the unit size or the types of heating, but also the heating zones. And again, these are determined by CMHC and given to us for publication. There's also a possibility that you could have both charges and allowances at your co-op. There have been a few claims that have come through that I've reviewed that have had that circumstance. So it is possible. Now we're going to look at another case where we have a single man who lives in a 2-bedroom apartment in Cornwall with his daughter. What? He's same as before. He receives Ontario Works, gross beneficiaries of 2. He earns $500 a month working part-time, but he pays for the natural gas for his furnace. So a little bit different from the previous scenario because the other one had said that it included all services. This one doesn't. So how does that change their calculation? So what you would do is you would again first determine is the $500 lower than the scale, the limit? So it is. We already know that, so we would have to use the scale. So looking at the calculations, we know that Ontario Works 2, number of beneficiaries 2 is $191, and he would be eligible for a heat allowance of $45, so it would further reduce the assisted housing charge to $146 a month. Now we are going to talk a little bit about the minimum housing charge. The minimum housing charge is $32 a unit, and it's a minimum for the entire unit, not per individual family configuration. It is also compiled after you've determined the utility allowance or charge. That's very important to note. So once you've done all the calculations, you've looked at the utilities, at the end you determine, does that meet the minimum? Is it below? Then it would bump it up to $32. Now there are some co-ops that have changed the minimum to $85, which is reflective of the shelter allowance for Ontario Works 1.1. And that's fine if they so choose to do so, but if it is going to, if your co-op does have that, you want to make sure that there is a policy or it's identified in your bylaws somewhere to indicate that, because otherwise it is $32. And it's not $32 if someone has zero income and they have a utility charge of $59. It's not 32, because it replaces the minimum of 0 income plus 59, it's going to be only $59 because, of course, 59 is higher than the minimum of 32. Now we're going to look at another scenario where we have a couple that lives in a one-bedroom apartment. They are receiving Ontario Works, but we're cut off. One person earns $150 a month for walking a dog, and the other person has $180 a month in income for delivering flyers. And the couple have to pay for their own gas to heat the unit. So in this case, we would have give you a few minutes if you wanted to kind of look at the calculation, and then I will review what the answer should be, just to give you a bit of time there. I'm just going to put us on mute for a minute. Okay, I was just kind of noted to me there that when I said for walking a dog, but yet our picture is quite reflective of multiple dogs. So anyway, I think this guy is we're getting a good bargain if you're using this man for services, $150 a month walking those dogs. Wow. So if we do look at this, we're going to look at the next slide and we're going to go through the calculation. So we have the first person who has $150 a month in income, and we have a second person who has $180. They're a couple. So because it's employment income, they're both eligible for a $75 earned income deduction. So that then reduces their their monthly adjusted income by that set amount. So now we're looking at $75 and $105. So then we're going to look at that amount, and we have to calculate it at 30%. So when we take 30% of $75, we get $22.50. And when we take 30% of $105, we get $31.50. Oh, but wait, they're also entitled to a utility allowance. So when we add the total income for each individual at 30%, subtract the utility allowance, we get a dollar value of $26. Clearly can see that it's below minimum, so you would have a minimum assisted housing charge applied, so the members would be paying $32 a month for that family unit. Clear, right? So as we said, it's lower than the minimum, so it would be the minimum amount. So based on that, we're saying, okay, so 30% for gross income or the scale, right? And that is actually not correct. We do have income from secondary occupants that's treated differently. So with a secondary occupant, you would take 15% of the first $1,000 of their gross monthly income, and then 30% for anything above that. They do not get an earned income exemption. So a secondary occupant would be someone who is not a primary occupant. Our guidebook, again, helps determine who is primary and who is a secondary. It's very easily found in a PDF, our guidebook, and if you're looking and don't want to go through the multiple pages of the book, as a quick reference, you can just do Control-F for find, type in secondary occupant, and it'll show you the relevant pages and where it appears. So it's a quick, easy way to look at that. Okay. We can talk a little bit about what is considered a primary occupant. They are a person who is living alone, a person and a spouse, a parent with a child, someone who may be legally responsible for a child, or any non-dependent relatives. It could also be somebody who is not even related and actually living in the unit, so a roommate of some sort. You could also have a primary occupant, as any person who is not financially dependent on another person in the unit, a person who could have been a secondary occupant at one point, moved out and returned and is an adult. It could be somebody who is receiving social assistance on their own, so having their own social assistance. They could have a parent that's working, but they're receiving social assistance. They would be considered a primary occupant. There would also be any current signatories to the occupancy agreement. Of course, this does not apply to any members who are 16 years of age and may be co-op members, but do not meet one of the other conditions in the list. So, a 16-year-old could still be in school and working part-time. They would be considered a secondary occupant. So when we talk about financial dependence, it would be another occupant that is living in the household and has provides financial support and is dependent, and the dependent, is a child under the age of 18. It also could be an adult child under the age of 26 who is enrolled in a full-time post-secondary recognized institution. Could be college, could be university. Could also be an adult child and their adjusted income does not exceed the maximum income assistance under the Ontario Works for a single person, and the value of their assets does not exceed the Ontario Works threshold. So right now we have another scenario for you to look at. We have a mom and her son that live in a 2-bedroom fully serviced apartment. She works part-time and earns $2,000 a month gross. Her son is 16 and is not attending school, and he earns $800 a month teaching swimming lessons. So when we're looking at that, we first have to determine is whether or not the son is a secondary occupant and why. So although he's not attending school, because he is under the age of 18, he would be considered a secondary occupant. So when we're looking at his calculations, we see that we have mom, who is the primary occupant, earning $2,000 a month. She would be entitled to the income deduction of $150 because she has her son, and she has for $75 and $75 for herself. So that brings down her monthly adjusted income to $1,850. We would do the calculation at 30%, giving us a dollar value of $555. But with her son, because he is a secondary occupant, we would calculate his income for the first $1,000 at 15%. So of course, in this case, he's got $800, that's all of his income, so that full amount at 15% is $120. The two combined would mean that they would be paying an assisted housing charge of $675. Now, if it's determined at some point throughout the year, in this case where the son decided to go back to school, and this household approaches you and identifies that, what you would have to do is you would have to get updated income from both. You can't base it on the annual income verification. You would want it at that current time, so you would have to, of course, get something from the school to identify that he is enrolled in school. Then you would get the income updates from mom, and I would still get the updates from the son as well. It's always good to have the full package. And then that case, then if he is enrolled and the proof is there, then his income would then be excluded from the calculation. So Income from all full-time students under the age of 26 is excluded from the housing charge. They, of course, must not be the primary occupant. If they're attending a post-secondary institution, income is not included if they've always lived alone, if they were single and had no dependent children, and they were not out of high school for more than 5 years at any time. Even if the student moves away for post-secondary education and comes back, they're still considered to always have lived at home. So don't get that confused. If they go away from September to April and come back to work for the summer and to stay with mom and dad, or mom or just dad, it would be considered to still always have lived at home. There are some different types of income that would be excluded from the calculations. I mentioned earlier about support payments could be excluded as long as it is verified. Of course, our guidebook is always something you should keep handy, print it off, or quick reference as a saved link on your internet browser is always great. Save it onto your hard drive. It depends on how you personally like to view things, but always have it readily available so that you can review what is included, what is excluded, or how a calculation should be done. Some things that are excluded from income would be grants and scholarships. So if a student is going to school and they received OSAP funding, if a large portion of that is a repayable student loan, of course, that is automatically exempt from the calculation. And if it's a grant or a scholarship, it is excluded as well. And of course, a lot of the programs like the Child Tax Benefit, your Ontario Trillium Benefit, your HST checks, all of those are excluded incomes as well. Sometimes you'll have a scenario where you've got more than one family unit in a household. So it can kind of make things a little bit complicated in trying to determine the terms of calculating how the housing charges should be done. So when you look at this, you think about a three-generation family. So you've got mom and dad, you've got the children, and then you've got mom's parents living there. So you've got 3 generations living in the household. Or you could have 2 friends living in a home with children. So, if you think of the TV show Kate and Allie, for any of you that's maybe old enough to remember, they had, of course, Kate and Allie, who were roommates, and then they had their own children. So when you calculate the base assisted housing charge, you have to calculate it for each family unit type. So when you do that, you would say family A, you would determine their income, then you do family B, and then family C, if that was the case. So we here have now a situation, we have a family of 5 that live together in one unit. We have one, Maurizia, have a son, Miguel, who is 22, and a daughter, Carmen, who is 19, but Carmen also has a daughter. So Juan has self-employment income of $1,500 a month. Maurizia works part-time, earning $800. Miguel, who's always lived at home, attends university full-time, but does have a part-time job earning some money doing some cleaning. And Carmen receives social assistance for 2 and has no other income. So I'll give you a few minutes here if you want to kind of jot down what you think the calculations should be as far as family configurations, primary, secondary, all of that, and we'll come back and review what the calculations are and see if you got it correct. So if we look again at the scenario here, I hope I've given everybody enough time to kind of quickly jot things down. We are looking at who would be primary occupants. So we would have Juan and Maurizia as a primary occupant, and then we would also have their daughter Carmen as a primary occupant. So with Juan and Maurizia, we would have employment income. Carmen would have social assistance, so Ontario Works. And then Miguel, his income would actually not be included at all because he's attending university full-time. So he would kind of be removed from the calculations. So when we look at this, we've got the two-parent family, so of Juan and Maurizia, and we have self-employment income for Juan, we have employment income for Maurizia, and of course, as I mentioned, their son is, Miguel, is exempt, so his income is excluded. Then we have Carmen and her daughter, who would be, have Ontario Works. So when we focus on looking at just the two-parent family for now, we'll work down to their calculations. You would see that because it's employment income, both mom and dad would have an income deduction, earned income deduction of $75 each, thus reducing their income down to $1,425 and $725. Then we would use 30% of both of those incomes. That brings us down to $427 and $217. Then if we look at Carmen, we know that she doesn't have any other type of income, and it's for Ontario Works 2 as a single parent with a beneficiary. So with Ontario Works 2, the base assisted housing charge would be $191 for her. So in total, that household would be paying $835, which is the $427 plus the $217 for mom and dad, and then the scale for Ontario Works of $191 for Carmen. Okay? And that would be their calculation. Some members actually have assets that generate interest, pay dividends, or any or other income. This should be considered for part of your gross monthly income calculations. Even if it doesn't generate income but is an expected increase in value over time, then the amount of income is assumed based on an interest rate set by CMHC. Currently, the imputed rate of return is at 0.0%, so 0%. So when that changes, of course, that changes when you're doing your calculations, but for now it's at 0. The assumed or imputed rate of return is part of your gross monthly income. So it's important to make sure that the members disclose all of that information. So it would include if you had GICs, stocks, bonds. I don't think many people have Canada Savings bonds these days, but things like that. Mutual funds would also be something that would be considered as part of something that would have an imputed income. As another example, we've put up here, we have a senior who moved into an accessible unit in the co-op. She sold her house just before moving in and taken the proceeds of the sale and invested it into mutual funds. So the investment does not generate any income, but it will likely have a value increase over time. Currently, the CMHC imputed rate of return is at 1%. So to do that calculation, you would take the annual amount of that she earned of 400,000, or she invested, sorry, of 400,000, times that by 1% or 0.01, and you would get $4,000. Now that would have to be adjusted then to a monthly amount because, of course, you're doing your calculations based on gross monthly income. So taking the $4,000 and dividing it by 12, you would get $333.33. So that would be considered as part of the gross monthly income calculation for the member. Self-employment income is also something that can be a little tricky. Self-employed people can have two different ways of producing income. They could actually form their own corporation, be a majority shareholder, and have draw from the income and expenses from that, file an annual corporate tax return. They can also not have a corporation and file a personal income tax return using a form that's called a T2125. It's a statement of business activities. So those are the two types of income or reporting that you would have to look for from someone who has declared that they were self-employed. If they had a corporation, and they, of course, would have to file an annual corporate tax return, they would receive unaudited financial statements from their accountant. It is a requirement to file those with CRA. So that would be something that you could use to verify what that person's income is. You could also use a copy of the Notice of Assessment that would outline the statement of the business activities that's received. You could get a copy, of course, of the tax return. And you could also ask for a proof of income statement from CRA. Easily, by far, it's the unaudited financial statements. They could, if asking for audited is okay, but it's a cost to the member, and if they're already looking for subsidy, taking the unaudited is just as acceptable, because it is, again, something that has the exact same information. Just getting a stamp of approval from an accountant, it can cost anywhere from $1,500 to $3,000 to get that, so they may not have the financial means to get an audited financial statement. If they have been in business for less than a year, they could get a statutory declaration estimating what they think their revenue and expenses are going to be for the year. If they don't have a corporation, it's a good idea to ask for a copy of the portion of their tax return that shows the T2125. That outlines exactly what their professional income is and all of their expenses, including business use of home, because it's important to have that piece of information, because they're not allowed to use the portion of the rent that they've paid against their income. So for an example, if they said on their tax return that their business income was $10,000 and they have expenses including like their cell phone, and they're claiming business use of home and a portion of the rent equating to $5,000, and they're saying to you, well, my earned income is $5,000 because I didn't have any other expenses other than rent, so that's my earned income. That's actually not correct. You'd have to take the gross of $10,000. So having that piece of information is always good to have in your package. So when you're looking to determine what is the adjusted monthly income for a self-employed member, you would use the gross income less business deductions. Of course, as I mentioned already, rent and your utilities. So business use of home is not an exemption. Capital cost allowances for depreciating assets. So, some self-employed people, like a taxi driver, they would have their car, would probably be a depreciated asset. There would be a component on that same T2125 that would have a portion for CCA value deductions that you could remove. If it's somebody who's like an IT consultant, they could have computers, their office desk, things like that. That's a depreciated asset that is not allowed to be removed from their calculations to determine their gross income. And then, of course, child care expenses. Sometimes people have work part-time jobs and they work on an hourly rate, and their pay varies from week to week. So it's quite fluctuating. So there's a number of different ways to do those calculations, but it's important to be fair and use the same method for all members. So if you're going to look at it depending on whether it's a biweekly basis, if they have an annual income of $32,000, you divide it by 12. You should be doing the same for John down the street, who also has fluctuating income. If the household has just started to have a fluctuating income, you can also use their notice of assessment to determine their calculation. If the household has had this type of income for more than a year, you can average the earnings over the whole year. So it would make it a lot easier. It would save you a lot of administrative work of redoing the calculations on a monthly basis and then just averaging it out, because in the end, the up and down, it would end up working out to be the same amount in the end, and it would save a lot of paperwork, a lot of administrative work on your side. When we are looking at the calculations, it's always good to follow some steps. Again, it's in our guidebook, but I just want to review this with you today. So you want to look at the household's income and assets. You want to determine what their gross monthly income is for each person. Determine what the monthly adjusted income is for each person. So, do they have the support payment reduction? Do they have the employment deduction? Then you want to do the calculation to determine the base assisted housing charge. So is it a primary occupant at 30%? Is it someone on social assistance that is under the threshold to use the scale? So you want to, or is it a secondary occupant who is over the age of 18 and you use the, or sorry, under the age of 18 and you use the 15% on the first 1,000. Once you do that, you want to look then at all those calculations, put them all together, and determine what the base assisted housing charge is going to be for the unit. Then you want to factor in your utility allowances or charges. So is it a deduction for utilities, or are you going to add on a charge for your utilities? Once you've determined that step, does that dollar value meet the minimum housing charge for the unit? Not individually, but as a unit. So if it doesn't, we know it's $800, then that's great. We're ready to move on. But then we have to look and consider, are they overhoused? What is the policy or bylaws in place for the co-op to determine the housing charge, overhousing charge, and add it if applicable? So if somebody's sitting in a 4-bedroom unit and they really should only be in a 1-bedroom, what is that? If the difference between a 4-bedroom and a 1-bedroom at market rent is $300, then we would add $300 at this point. Then we would look at whether or not there are any additional charges for the member. When you're looking at your input for your online rent supplement claim, it's at this point that you would put in the dollar value. So if, as I mentioned, $800 plus a $300 overhousing surcharge, you would enter in $1,100 as what the member was paying. If there's anything in addition, you would add it for the member to pay, such as your sector support, your cable, or parking. Sometimes you would have a member that might have moved in partway through the month, so you would have to determine a prorated figure for the partial month. Another note is important is that when you're doing the online rent supplement module, you don't have to worry about that calculation. The system will automatically do it for us. So as long as the effective date, if somebody's moved in on the 15th of October, and you have identified October 15th, the system will automatically generate the calculations based on the income to see if it matches what you've identified as their assisted housing charge. So we're pretty much done with talking about calculations and the program. I'm always here. I'm quite readily available to answer your questions. You can always send an email. You can always call. I'm very flexible with my time, and that's one thing I always stress to people, that I understand that you're busy. Sometimes you have different hours. You know, the board may require you to work evenings. I'm okay with that. I don't mind taking calls if I can, if we can set it up in advance. But I'm more than willing to talk to you on weekends, days, nights. I'm here to help you. So, I have talked to people on Saturdays and Sundays. So as long as my schedule allows it, I'm more than willing to do so. You can also refer to our website. It's a great resource. We've just updated it recently. I don't know if anybody has seen the new look, but it's great if you're not sure of where to find it and you can't navigate around. There's a great search engine. You just type in what you're looking for. It provides us with the rent supplement guide, your utility charts. You've got your annual income verification. We've got a lovely form there that could be utilized for yourselves to send out to your members for the applications. We also have our own link that says Rent Supplement, and there you will find everything pertaining to the Rent Supplement program, including damage claim forms for those who are an ILM co-op. There is a cost recovery method for those co-ops who are ILMs to receive reimbursement for damages and repairs to any damages that a rent supplement recipient may have caused to the unit. It's a good tool to be used. Is our website as well. Before I let you go and answer, I'm sure, a lot of questions you might be having over this, is to talk about the annual filing. So as you know, the old way used to be the Excel Form A, Form B, and we have created this wonderful online module that helps us in doing the reviews of the claims, and also provides you with an easy access to entering in all of the data on an ongoing basis. So you don't have to wait till the end of your fiscal year or for your fiscal year to pass to update your information. Each year when you receive your letter to advise that your year end is approaching, you will receive in there a new link. We do this on an annual basis. It's for security reasons, to protect the privacy. So the link that had been existing previous will no longer work. You will have to use the new one. It's always a good idea to keep the information up to date. So if a member who is a rent supplement recipient comes in and says, I've got a change in income, my son is now going to school, you want to make the change effective August. Your year end, of course, is not till December. Go into the system and update it right then and there. It's great. It'll save you a lot of work. You're already busy enough at the end of the year trying to get things ready for your auditors. So this way it'll eliminate all of that extra work at year end. And that way we can get it reviewed, your filing on time. Because as you know, the auditors can't complete the AIRs until we have reviewed that claim. If at any point, as you know, when you're working on the claim, we've got wonderful tutorial video and user guide. At any point, at any time when you're working on the claim, you're stuck and you can't remember how to do something and I'm not available, it's 11 o'clock on a Friday night, you just click on one of those two links and it'll take you exactly where you are at that moment. So again, whether you're more of a visual person or you would rather just have something in your hands and reading it, you have the two different ways to look at what you should be doing to complete the input. So I think that is about it. I hope I didn't talk too fast. I hope that you learned something from this, maybe created more questions than you really wanted, but I do appreciate your time and I thank you for joining us this afternoon. It's been great. Unfortunately, I didn't get to meet all of you face-to-face. I was really happy last week meeting some of the people that I've been working with over the last little while. So anyway, look forward to working with you all again in the next year as your claims are due.
Thanks, Trina. So we're just going to exit the presentation here and get into an area where we can see the questions, and we'll just work through the questions one by one. So just bear with us here for a second. How come that isn't popping up?
Yeah.
Try the other. No, that was that one, right?
She thought it was this one.
So we're just having some technical problems here, but we're working on getting access to the questions. So just bear with us for a couple of minutes, please.
Sure.
Okay, we're back. First question that we have is, do 16-year-old children that are not members but live in the household have to sign the RGI application? What about long-term guests?
Yes. So regardless if they are considered a member or not, it is everyone who is in the household. So in both instances, the 16-year-old would have to sign as well as the long-term guest.
Okay. Next question. Does the 30% rule affect the Section 95 programs that have been using a different amount?
Yes, it does. Absolutely. So we have been seeing that where some of the Section 95s have been increasing it to match. They also may have the ITA, the Income Tested Assistance Program. So that is in effect. So we have been monitoring that very closely, and it is mandatory that we will be doing the adjustments at a 30% calculation.
For the rent supplement units.
For the rent
right?
supplement units, not the ITAs, yeah.
All right, so the next question. Shouldn't there be a utility charge for a fully serviced unit?
No. Because all services are provided, there is no charge for that.
Next question. There are 5 utilities. Why are there only 2 allowances?
5 utilities. I'm not sure what I understand about that, because you'd have heat and you would have electricity. Those would be your only utilities.
Water?
Water, yeah, but typically water is, yeah, I guess, yeah, 3. There's your 3. But it's for your heat and your water allowances. I'm not sure I understand why are there only 2 allowances. I really can't comment on why there's only 2 allowances. That's something from CMHC that they provide. I could certainly ask them that question and get back to you on that.
Okay, so we'll. If you have anything to add, whoever posted that question, then feel free to send us any further details or a particular example. The next question is students, meaning they all had already lived in the unit.
Yes. So if they've already been in the unit and under the age of 26.
The next one from the same person, what about the member that is a student but not living with parents?
Well, again, if it's a circumstance where the student was living at home but is attending university outside the city, they would still be considered a member of the household. If they're a student and not living with the parents, then they wouldn't even be part of your household calculations whatsoever. They shouldn't even be on the occupancy agreement.
Next one, what about TFSA accounts? How is that account accounted for in a calculation?
That's a really good question. So tax-free savings accounts, of course, are exactly that. You obtain interest, but you don't have to pay tax on that. But when you think about it, it is expected that they would obtain, it would be income at some point. So they would have to provide you with statements that would identify what their value is ongoing, and they should be included in the calculations.
All right, the next question from, well, I won't identify the people. Please clarify the proper amount to use to calculate
imputed rate of return.
Oh, the imputed rate of return.
Okay, so the example we gave, because it's 0% currently in the real world, our example just gave a 1% just as a scenario calculation, but currently it is 0.
So meaning that when people have declared assets, there is no additional amount to add to the calculation, but if that changed, then
it would be included, yeah, because 0% of anything obviously is 0.
Mm-hmm. All right, it's a question of overhousing. If you move the individual to your smallest unit, i.e. 2-bedroom from a 3-bedroom, but they are a single individual now because the kids moved out, should we add a surcharge? How would that be calculated? As a 2-bedroom is my smallest, can we offer RGI to a single individual? We made a deal with CMHC that no new applications could be accepted for single individuals in a 2-bedroom.
Well, I would have, in this case, I have seen scenarios where some of the co-ops have identified an overhousing surcharge based on the difference. Again, so theoretically, if your housing charges go up for market rent at 2% a year, it's a 2% increase for every unit size. So if a person is overhoused and you don't have a 1-bedroom unit at all in your portfolio, if the unit that member could also be charged the difference between the 3-bedroom and a 1-bedroom times 2, because theoretically then if they drop to a 1-bedroom, it would be the same dollar amount again. So it would be like a $40 difference between a 3 and a 2. You could charge another $40 for a 2 to a 1. May also be a good thing then in that case that co-op would charge based on the number of rooms. So if if they were overhoused by 1 room, then charge a reasonable amount. Like you can't just say $10 and be satisfied with that. It has to be within reason. So maybe $40 or $50. That's kind of the standard number I've been seeing when they do it based on rooms.
So the point here is to have a consistent approach.
As long as it's consistent, yeah, and fair.
Right. So moving on to the next question, if we have 2, 3, and 4-bedroom units and a 2-bedroom is overhoused, are they charged the overhousing surcharge?
Again, I think that's similar to the previous question, yeah.
So the next question, if you only have 3-bedroom units and have no units for the member to downsize to, would you apply? Okay, so that's basically the same question. So it's a hot topic. At what age does a secondary occupant, in brackets child, become a primary?
So in that case, it's not always a question of age. You could have a child, again, as a child meaning, being recipient of a social assistance. So they would be considered then a primary occupant. So 18 typically is adult, and other than that, it would be depending on their type of income that they have.
So you could have a child of the household that's up to 26 years old. That is a secondary occupant because they're attending
school,
secondary education.
That's correct.
Right.
Yep.
Next question: if the member is overhoused and you have no units available for them to downsize to, would you apply the overhousing? So same question as we've had before.
Yep.
And I guess the second part of that question is, or do you have to wait until a smaller unit becomes available to offer them, and when they turn that down, would you then apply the overhousing surcharge?
You should apply the overhousing surcharge regardless whether there's a unit available or not. It is important, as we've mentioned, CMHC does not want to pay for overhoused units. So you should implement your overhousing surcharge now.
Next question: what would you do with the income of 2 adult students over 26?
So again, they're over that threshold. If they're over the age of 26, their income should be calculated and included in the calculations.
Next question: the slide said that students are not primary. My scenario would be that the household is a single mom who was OW2, now is attending full-time school and receiving OSAP. She is still a primary, correct?
Yes, that is correct. She would become a primary occupant. I have seen this scenario in a lot of cases, and I'm sure with this, she would have a portion of it being student loans and a large portion for grants or scholarships. So theoretically, her income would then be zero. So you would apply whether it was utility allowance or charge, then determine if it's more than the minimum that you have in place for your co-op. But most likely, she would be paying the minimum of $32.
Okay, and then the next question is a clarification. We touched on this earlier when we were talking about Section 95 co-ops that also receive rent supplements from CMHC and the 30% rule. So, just the clarification is that this only applies to Section 95 co-ops that receive OCHAP so it's technically possible for co-ops that have both income-tested assistance and rent supplement to have 2 different percentages. You always have to use 30% of income for the rent supplements, whereas for the income-tested assistance, the percentage can vary because that's part of the Section 95 program. There's that flexibility. So that's a clarification. Where can our board of directors obtain samples of subsidy policies / overhousing policies to assist in developing their own? I would suggest that you approach CHF Canada or your regional federation for that. We don't have any samples of subsidy policies. I know that CHFT has been working on a rent supplement bylaw. I'm not sure if it's ready to be shared, but it's something that they are working on. Oh, we have one more. Do you want to scroll down? Okay, one more question. Oh no, there's a few more. 2. Could a 56-1 co-op raise the minimum housing charge to $200 per month? They don't receive any OCHAP funds. Well, that's of course specific to Section 95 co-ops, or previously known as 56-1. It's not really the subject of this session, but to answer that question, the co-op can certainly change the minimum housing charges for households that receive income-tested assistance. Next question, does the income of a dependent student get counted during the summer months even though they are not in school at that time but still continuously enrolled in a full-time university program?
No. So in this instance, if they come home to work for the summer months but they're continuing on with their post-secondary education, it would be excluded because they would still be considered a full-time student. Now, that being said, if they end their last year, of course, you know yourself, typically it can take 4 years to do an undergrad degree, or you go to a college. It's typically a 2 or 3 year program. So you kind of are knowing when it is expected that the child should graduate. So at that time, when they do graduate from the program and they don't plan on going elsewhere, and they start working, at that point then, yes, they would become, their income should count, and that the household should be notifying you that there is a change in the household income configurations.
Okay, thanks, Trina. The next question, are overhousing charges required or advised? I would say that it's advised. There's the rent supplement agreement does speak to dealing with overhousing, but it doesn't require overhousing charges. What about dependent high school students who are homeschooled? Oh my goodness, so many different situations.
Well, I actually can answer this. I had this question just yesterday. Maybe it was your co-op. But someone who is homeschooled is still considered, as long as with the province of Ontario it is recognized and that child is going to be receiving a high school diploma when they are finished, yes, their income would be excluded. So in that case, there would have to be a registration with the province to identify that they are being homeschooled. So the family will have some sort of supporting documentation to prove that they're able to homeschool their children and that it's been approved. So there is a documentation that they can provide to you to prove that.
Okay, next question. Does the overhousing surcharge need to be a bylaw or can it be a policy? My advice would be a bylaw.
Yeah.
Next question. Could you briefly touch on RRSPs and RIFs?
Okay.
In terms of whether their income, do you want to maybe just?
Well, I mean, if an RRSP, of course, is it's an investment, as is a RIF. So. With those, you would do the same thing as it's income, so you would have to use it as part of the calculations. You would have to get the dollar value of that with the income information that they are providing. So then you could determine what the expected value is going to be and determine what the monthly income would be after you've done the annual calculation. So yeah, I just don't know to what extent they want. Maybe we can take that offside and talk about that. I'd like to get some more details on that.
Yeah, a RIF is usually an RSP that's being paid out. So
yes.
That, but I'd have to check the details of the included and excluded incomes.
Yeah.
Okay, so the next question is, can you please review the third bullet point under the definition of secondary occupant?
Okay.
Let's try and find that back in the presentation. Yeah, that'll be the last question because it's time for us to wrap up.
Yeah, I don't see much. I don't remember.
But this, I think here.
Well, that's financially dependent.
But financially dependent is
secondary occupants. So
is that some? Let's just maybe review that. So occupants who are financially dependent are secondary occupants.
That's right. Number? It's slide 30, but I just want to see what the question was again, if it was the third bullet that they were talking about. Can you please review the third bullet under the definition of secondary occupant?
So is that, I'm assuming that that's from the presentation as opposed to...
As opposed to the guide.
Yeah.
So it says an adult and their adjusted income does not exceed the maximum income tested assistance, so the basic needs and shelter allowance under Ontario Works for a single person, and the value of their assets does not exceed the Ontario Work threshold. So somebody whose income is less than the Ontario Works threshold for Ontario Works 1.1, which is $85 on the scale, they would be considered financially dependent.
So if they qualify for OW1, then their
and their assets don't exceed the threshold.
Mm-hmm.
Yeah.
Then if they qualify, then they're considered a primary occupant. If they don't qualify, then they would be
considered financially dependent, which would mean you're a secondary occupant.
There you go. I hope that answers the question.
Yeah.
All right. Well, lots of good questions. Thank you so much for all your questions. I see one more that came in, so maybe we just have a couple more minutes here, so maybe we'll tackle that. So if a member starts receiving subsidy and receiving child support arrears payments from 5 years ago, how would you calculate that?
Well, it's at the time they're receiving it, because if on their application 5 years ago they declared that they were not receiving that money, but then they started receiving it, it would be considered income because it's taxable. Is it child support? Child support's not taxable income. But it should be included in the calculations at the time in which it's received. 8,000. So good question. Maybe that's a significant amount of money. It's a lump sum payment. Mm-hmm. I think in this case I am going to have to refer to my guidebook because I don't know the answer offhand. Imagine that. There is a scenario there though that would talk about that and how that calculation would be done, whether or not you would take that amount and draw it out over as a lump sum payment for the 1 year, so divide that over the 12 months. Or we do a retroactive adjustment back 5 years ago.
That would be difficult.
That would be very difficult to do. So that would be one of those, as we mentioned before, where it's not pure, clear science. That's one of those anomalies that we would have to kind of investigate and make sure we give the proper advice. So we'll get back to you on that one. Yeah. So that's it for today. It's almost 3 o'clock. So this is the end of the webinar. Thank you so much for joining us and for your great questions. And look forward to continuing the conversation. Thanks, everybody. Have a great afternoon. Bye-bye.
Thank you. Please stand.